All right, yo. Oops. What is up for everyone on the YouTube replay? We're going to be looking at some stocks that I think are the best ones to buy now. And I actually just bought a brand new stock for the first time ever. I've never previously owned this stock before, and it's one I've been talking about a whole bunch. It's one of my favorite stocks to buy right now, and I just bought them finally for the first time ever today. And let me share with you, let's just get straight into it. Let me show you the new stock I actually just bought down here. I bought 1.5 shares of ticker symbol APP AppLovin for the first time ever. And let me share with you why I bought the dip on AppLovin. I didn't just buy the dip because their RSI technically oversold. I bought them because the fundamentals are so quality in my opinion. So let's just dig straight into AppLovin and why I bought them, and then I'll get into some of the other stocks I think are at pretty decent valuations. So first up, AppLovin on the right, they trade at only right now at a 24 forward PE, which means they traded only 24 times next year's net income. Here's why I think that is a steal of a deal. Because if we just go to this company's basic net income, this is after-tax net income. If we zoom out, it is at a record. It's never been higher than it has been this quarter. So they literally made $1.1 billion in net income, up 83%. After it grew 250%. And the growth isn't done just yet. So they did 1.1 billion this quarter. Analysts are expecting next quarter 1.18 billion. And then the quarter after 1.25 billion. And they historically usually beat on their net income numbers. So that's why I'm so excited about this company, because they really do trade at only 24 times forward PE, forward net income. And check out the margins. This is the crazy part. So here's the revenue they did. The total revenue, the sales was 1.66 billion. Out of this 1.66 billion of revenue, they netted in real after-tax net income after they paid 200 mil of taxes or 180 mil of taxes. They kept 1.1 billion in net income, which means their net margin is a dang 66%. This is like a margin expansion play. It's like 60% every quarter. It used to be lower. So just check out their net margin. This growth rate, like what's their margin going to be the same time next year? So that's why I'm a big fan of AppLovin. Good valuation, I feel, at a 24 forward PE, great EPS growth, great net income growth. Let's see if there's any news. I think there's some SEC news. SEC confirms active investigation into AppLovin. Like their ads are so good that the SEC is like investigating them. So that's another reason why the stock might be down or the sentiment might be down. But they had great earnings results. AppLovin plans to build social networking platform after failed TikTok acquisition bid. Oh, did they try to buy TikTok or something? Oh, look at this. Unconfirmed report suggests OpenAI considering partnership with AppLovin for ChatGPT ad monetization. This news, I didn't even see that news. So that's actually pretty cool. So anyway, that's why I picked up AppLovin for the first time ever. Let me know what you think about that one. Hey, good to see everyone. Egg Mayo. What up, Cass? He said was waiting for the live. Thanks, Cast. I appreciate you. Shout out to member Plasma. I mean Looney and Plasma. Y'all are always first. I appreciate y'all. What up, Cruz? Novo Nordisk. Yeah, that was a big thing today. Actually, did they report earnings? I didn't look into them. I just saw that they fell. Yikes. Novo Nordisk is down 15%. They're actually, I think they had not too good results of their weight loss prescriptions. So yeah, they failed to meet their endpoint results. And the Eli Lilly Zepbound did meet the results. So they actually have like an inferior weight loss prescription than Zepbound does. So they're kind of just been eaten up by competition right now. But, and they lose a lot of their patents. Some of their patents for like their main product, Ozempic, expires in 2028 and 2030 in China. So that's why the multiple has compressed so much at a 12 forward PE. Notice the forward PE is higher than their current PE. That means their net income is supposed to go down next year. And we can see that from the revenue point of view too, because they're cutting prices. Revenue is going to go from 12.14 to 11.184. So that's, not great of a expectation there. So yeah, I don't know what I'm going to do. I'm just kind of staying away from Novo Nordisk. I'm also staying away from HIM's stock. AIR said SoFi stock. Yo, I'm down bad on SoFi today. Yeah, I should give a portfolio update because we tanked. But yeah, for the people that said what stock did you buy? I bought AppLovin, APP. Pretty cool. So yeah, here are all the stocks. Well, here's how my portfolio is doing at the top. We're down 2.77% on the day, and we're only up 3.6% all time in this portfolio. So we've definitely underperformed the market. And here's our big losers today. Futu, UiPath, a lot of the software names, fintech like Dave, and then there's SoFi. and Robinhood's down 5. RIP Robinhood and SoFi. But I really think SoFi is at a very good risk to reward. Full disclosure, I do own SoFi, so I might be biased, but let me show you why I really like SoFi. They're just like HIMS, where they're very growthy. The metric you want to watch if you're a SoFi shareholder is this right here, their financial services. And here's the annual growth of that. Look, in 2020, for the full year 2020, this did 11 million in revenue. For the full year 2025, it did $1.5 billion. Check out these year-over-year growth rates. It's up 78%, after grew 85, after grew 114, after grew 290. Like, this is immense growth, and that's why this company gets a high multiple, and there's so much hype around them. But they were just recently falling because all of stocks are falling. So if we go to the right, this is why I think SoFi is really worth like nibbling on right here at a 27 forward PE. Like, if I wanted SoFi as 5% of my portfolio, I wouldn't make it 5% today, but I'd go ahead and make it 1%. Like, the risk reward does look very fair right now on SoFi. They have great growth. They're beating on expectations every quarter. Here are the analyst expectations. It's that orange line. They beat on revenue every quarter. They beat on net income every quarter, and the net income projections are just up and to the right. It's supposed to be nearly 200 million in 2 quarters. So I'm a big fan of SoFi. So yeah, I think people are really starting to take them serious. They're one of the better fintech stocks to buy on the dip. I also think, what's that one? Oh, I bought a little bit of Webull today. Robinhood's a good buy. Fu2. Bought more AppLovin this morning, below 400's a steal. I agree, Cone. I bought some of that today. Yeah, that's my newest position. AppLovin's margins are like NVIDIA's margins. For real, my music, I know. Actually, they're better than NVIDIA's net margin, which is crazy. Interested to see NVIDIA earnings this week? Yeah, or this Wednesday. We get Salesforce and NVIDIA on the same day. Yeah, here's this portfolio. Comfort Systems is down $700 on the day, but it hit an all-time high yesterday, so I'm not like too worried about that. Okay, let's look at some more here. Someone said Palantir. I just bought Palantir today. What do you think? Yeah, Palantir is another. These are great names. I'm glad y'all are giving me some great stocks here. Like, I'd buy all these. These are great buy, never sells. I still think Palantir might be a little expensive. Like, even on this dip, they are a little expensive, but they deserve to be expensive because they are so growthy and so quality. Is there any news? Palantir formed strategic partnership with Rackspace Technology. U.S. Department of Homeland Security awards Palantir $1 billion contract. Kind of cool. So anyway, let's check this. Did that say Michael Burry was shorting? Michael Burry discloses short positions. He criticizes Palantir's business model and predicts a significant decline. Well, there's Michael Burry doing Michael Burry things. But yeah, here's why it's still a little pricey on the right. They're at 105 forward PE, so they traded 105 times next year's net income. But look at how much of an improvement that is versus their right now PE. So their net income is literally going up double. And then so you really do a PEG ratio, a price to earnings growth, and do a multiple year out forward multiple. But anyway, here's why I'm so impressed with Palantir's numbers. Check out their government revenue. So a lot of the revenue comes from the government. You know, a lot of police stations, the Air Force, the military use them. And look at the growth. It's so good. It's up 60% year over year. After grew 41, after grew 10. So literally the growth rate is growing on the government revenue side. And not just the government contracts, but also the commercial side. This is arguably even better. That grew 82% year over year. After grew 31, after grew 23. So just phenomenal growth. And it's not just revenue growing. Like, here's the revenue. Like, this is why they deserve a lot of hype and high multiple, because the growth is just so good. And it's not just the revenue, but the net income too. Highest record net income they've ever had. And a big cherry on top as well is this fortress balance sheet. Palantir has no debt. They don't owe anyone any money. And the free cash flow is just so good. So I have no complaints on Palantir, except that the valuation is still a little high. But it's not even like that crazy high. So I would like, I do really like Palantir. I would slightly nibble on them. Yeah. Yeah, no problem there. What is GNPX? Let's check that one out. GNPX, then we'll do Dash and some of these other stocks. Hey, what up, Sean? He says Meta. Yeah, Gary, what up? He said AMD. Sorry if I'm missing some of the chat. Sorry if I'm behind here. Yeah, we're not going to cover this stock. Dang, if you look in the top right, you know, we just don't really cover these stocks. This whole entire company in its entirety is worth only $5 million. And they're at an all-time low. Usually the financials explain it. So yeah, imagine this, the whole company's worth $5 million. Let's say you buy it, you could buy the whole company for $5 million. You're buying an asset that literally loses you almost all your money back a quarter. They lost $4 million this quarter, $5 million, $4 million. That's the whole market cap. Plus, they have no revenue. We go to revenue. It says no data because they've never sold anything, not a product or a service, and they have no this about they have no assets. So I would totally not buy this stock. They're worth 5 million for a reason, and they're most likely going bankrupt. Sadly, hopefully that was kind of helpful there. I like to bag on people's stocks, but I just could not like recommend that one. So, hey, no way, dude, Isaiah with the crazy gift there. Dude, Isaiah, thanks for that crazy hand heart gift. If you have a stock you want me to look at, let me know. I do appreciate that, man. So yeah, dang, what's up, Nick? He got his portfolio tank today. Yeah, another rough day. Okay, let's do Meta. What up, Sean? So yeah, let's do Meta real quick. This is another one of my favorite buys right now because they're at a great valuation in their quality. You know, during this dip, don't buy the low quality names, like buy the best quality names. And I guess there's a little technical analysis thing for them, but the fundamentals, the financials look phenomenal on Meta. If we look on the right, the forward PE, which is basically price to net income, they trade at 21 times next year's net income for a Mag 7 behemoth Meta. That's so fair. They also have literally 3.54 billion daily active users. So pretty much half the world is on a Meta app once a day. And they're introducing ads to WhatsApp and onto Threads. If you heard of Threads before, it's one of their apps. So nearly has the same amount of daily active users as X. So there's a lot of earnings tailwinds going to come. And why are we looking at the forward multiple? Because last quarter they had a one-time adjustment to their net income. It was a record quarter. So when you exclude that one-time tax adjustment. So everything here is headed in the right direction. I have no complaints. Meta is spending a lot on AI. That is one thing being questioned. Here at the bottom, their cash from investing activities are spending 25 to 35 billion a quarter, and they just guided to spend 40 billion for the next 4 quarters in a row. So we do want to see them get a positive return, but that's not scaring me out of Meta. I am a shareholder. I love what they're doing with the Meta Ray-Ban glasses. They're getting into smartwatches now. I'm a big fan of the ad business model from Facebook, Instagram, and all these apps. So yeah, I am a shareholder. I got 5.1 shares and we're up 21%. So there's my position in Meta. 21 forward PE, like the risk reward's so good. So good. And yes, sir, Isaiah, he says, Isaiah, dude, thanks again for that crazy gift. He says, can we do Dash and PSAX? Yeah, let's do both of those. Thanks again, dude, with the Night Star gift, dude. Dude, Isaiah, thank you, man. And Omar as well, dude, for the ice cream cones. I really appreciate y'all. So yeah, DoorDash right here. Let's see what they reported. So weekly news completes acquisitions of Deliveroo for 3.7 billion and 7 rooms for 1.2 billion. So they're actually doing a lot of acquisitions. That's very cool, actually. So that'll add even more future growth. So Deliveroo, I believe that's an Australian it's basically Australian DoorDash, Deliveroo, and I don't know what 7 rooms is, but they bought them for 1.2 billion. DoorDash reports 56 million monthly active users, expect grocery and retail unit economics to turn positive in the second half. CEO outlines AI strategy. So anyway, let's see what they reported. Here's their total order metrics, 903 million total orders. Let's see what their profits were. So this is the best part. So DoorDash a year or two ago, it was a tough buy because they were losing a couple hundred million in net income a quarter. But now DoorDash is at the point where they're printing money every quarter. Like these year-over-year growth rates are incredible. It's like up triple digits. Triple digits. And it's now a couple hundred million a quarter. And at this growth rate, like what's it going to be the same time next year? Yeah, very cool to see them doing these acquisitions as well. That'll bring even more growth. Like the growth organically is already great, like 27%. But in the future, it's going to be even more because they basically just bought 2 companies for $5 billion. And the whole company is worth $71 billion. So yeah, it's like 7% of their market cap. That's actually I like that they're doing acquisitions. It did look like they missed on net income slightly. Like I guess analysts expected 257. They only did 213, but it's no big deal. All right, so that's DoorDash. I think they might still be a little expensive on a forward PE, but they just got net income positive. So yeah, they're at a 63 forward PE, which is much more expensive than like an Uber right now. Like Uber's at like a 20 forward PE, but that's because they're just now, as of like the past 4 quarters, making their first ever net income. So yeah, I do like DoorDash. And then PSIX, this is another interesting kind of AI play that's like a small market cap. I am a shareholder. We are up 32%. So we're still up a pretty decent chunk on this company. There's my 5 shares of this one. So let me share with you why I like Power Solutions. If you look in the top right, they're only worth $2 billion. So I kind of like that the market cap is kind of low, only $2 billion. And look at the valuation. They're actually pretty cheap on the right. A forward PE of a 19. They had a one-time adjustment, so it makes them look like they're really cheap at a 16, but they're not actually. So even on a forward metric, though, they are cheap at a 19 forward PE. So if we go to the revenue right here, like this, this is what you want to see. I'm clicking the wrong buttons here. Hold on. Here we go. Revenue. There we go. Yeah. The revenue's up 62%. Last quarter's up 74, 42, 37. So the revenue's growing. And same with the net income. Check out these year-over-year growth rates on the net income every quarter. Almost triple digits every quarter. So I'm just a big, like if we zoom out, like this is the highest amount of net income. Let me zoom out here. They've made like ever. So they're like really starting to print net income. So I'm a big fan of Power Solutions. Yeah, they're not even expensive. But I'm a fan of keeping it as a very small position. Like I would not keep that one as like a meaningful size position. Yeah, Omar, thanks again for the or the ice cream. Yeah, let's do Weeble. And what up, Joaz Diaz? I'm probably saying your name wrong. I apologize. But good to see you. I hope everyone's having a great day. I know the market's a little red, but hey, that gives us the chance to buy the dip on great companies. Let's actually check out a lot of the defense names are up, like McDonald's. Yeah, CrowdStrike is down 10. So the cybersecurity names are tanking. And I do want to look at CrowdStrike a little later. But for someone to just ask, yeah, the new stock I bought actually was AppLovin. I did a whole deep dive in them at the very beginning. So I'll go over them a little later. But yeah, AppLovin, I bought 1.5 shares of for the first time ever today. And I bought 5 shares of Weeble today. So here's Weeble stock. This is kind of like a pseudo crypto play. They're like the picks and shovels fintech. They're like if you heard of Robinhood stock before, they're a smaller Robinhood. Hey, here's my actual Weeble app. You know, I'm a user of the platform. What I find so bullish is how they are getting into the crypto markets and prediction markets. And these prediction markets make Robinhood a boatload of money. So basically, Weeble's copying Robinhood's successful business model with the prediction market contracts in crypto and the subscription model. So I'm just way more bullish than the analysts are. So it's kind of just following the same bad momentum that all the fintech names are like. SoFi's at a 52-week low. Robinhood's at a 52-week low. So Weeble obviously is too. This is one I'm more bullish on. But that being said, they're still expensive. Even at this all-time low level, it's not like they're cheap. Let's see what the forward PE is. Yeah, 41 forward PE. But it's cheap enough to buy a little bit of. Like you don't have Weeble as a meaningful size position, but I think it's so fair to start slightly nibbling. Like it's one of my smaller positions. It's only $480 for me. But yeah, I got 86 shares of Weeble as a very small position. They're like one of those small companies you have as like a risky bet. That I think the risk reward is so good. Like I really don't see Weeble going much further down. Same with Robinhood, SoFi. They all look great. Yeah, no problem, Isaiah. Nah, thank you, man. I appreciate all those gifts there. What can you check PayPal? News said best S&P stock today. We're PayPal. Yeah, this one, they're up 6% of the day, but they have had a rough time amid takeover reporter. We'll check that out actually. Yeah, if we scroll out on the monthly chart here, here's one of the bad, like I feel bad if you're a shareholder of PayPal because PayPal stock is technically the same price that it was back in 2017. So you bought the stock over a decade ago. It's lower than it was. So let's see what this report says. Takeover interest. PayPal's potentially getting buyers. That's interesting. The cool thing about PayPal is they still print money, but the valuation have just been crushed because I don't know if they're just going to be like out innovated. They're trading at like this commodity multiple of an 8.8. The forward PE is slightly higher than the current PE, but that's okay. An 8.8 forward PE because they do print net income. Like here's their after-tax net income. They easily make like 1.3 billion of net income a quarter. The revenue growth is kind of slowed down. Like it's kind of low single digits, like 3%, then 7, 5, 1, 4, 5. So kind of the growth is slowing, but they're still printing net income. And what is PayPal doing with 1.5 billion net income a quarter? Well, they actually just started paying a dividend. So they now pay a dividend, but the main winner is the share buybacks. Since the stock is so cheap, they're buying back like 1.5 billion of the stock a quarter, but I'm just staying away from PayPal. I think that there's better fintech stocks to buy on the dip because I don't know really if PayPal is going to outperform, the S&P 500 in the long run. But there's certainly a dog cheap valuation, but I really like a SoFi, a Dave, a Robinhood, a Weeble. It's like a slightly more higher quality, similar industry pick. I mean, not exactly similar industry. And by the way, it's not just PayPal that's struggling. PayPal's Venmo. Look at Cash App stocks. Yeah, if we scroll out or look at this company right here, XYZ stock, 62% of the revenue comes from Cash App. And Cash App, which is very similar to PayPal, is the same price also that it was back in 2018. So it's been flat for a decade as well. So it's not just like a PayPal problem. I think they might just be, the whole industry is seeing an issue. Do you own any Microsoft? I do not own any Microsoft, but I'd love to own them. They're a steal of a deal. Would you cover UPS? I'm looking to get your input. UPS, this one I think needs to cut their dividend, but they've been able to successfully move the tariff prices onto consumers, and it's making them a lot of money. But here's the bad news is how unsafe their current dividend payout ratio is. This is the only concern because look, Well, first off, if you like UPS for just the business model, you'll like Amazon better as a stock. But this one, I feel like most people goes to for the dividend, and I don't feel too safe with this dividend. So let me show you this. They have a 5.7% dividend yield. Let's go see how much their dividend cost versus how much they make. So they made 1.8 billion this quarter, but on the other 3 quarters, they made 1.3 billion or less. So on average, let's say they make 1.4 billion a quarter. So they're making 1.4 billion in net income a quarter, and the dividend cost exactly 1.35 billion in net income a quarter. So they're in a scenario where they're literally paying out all of their, literally almost 100% of their net income straight to dividends. And so they have no leftover money to, do share buybacks, reinvest in the business, do M&A, all without having to either like dilute you or issue debt. And it's not great because the organic revenue, just the sales, the lifeblood of the company, it's down 3.3% year over year. So revenue's down, but it's almost like a tariff play. I don't know. Here's their average daily parcel volume, or average revenue per parcel is $14.60. So anyway, I don't love the dividend on that one, so that's why I stay away from that one. And I own Amazon. Amazon's kind of like a UPS with like a bunch of other businesses as well. That might be a slight bit growth year. All right. Norbero said SLM, and I'm so sorry. I am so behind on so many stocks. So I apologize if you're saying a stock and I don't get to it. I apologize. There's just so many stocks people are asking me right now. So, but also I appreciate everyone that's here. I stream every day. If you want to hit the follow button, I sell nothing, no course, book, coach. I do nothing. Just ought to give my opinion. So here's SLM Corp. They're down 10% on the day, unfortunately. Let's see if we can figure out what happened. I think it might be more. Did they report earnings or was it just today's just the red day? Okay, so let's see what this company does. They're very cheap on a forward PE of 7.5 forward PE. Are they a commodity industry? So credit services, educational loans. So they have a 2.5% dividend yield. So they do educational loans. So lending. So high quality private education loans. So high quality education loans is what they do. And here's their bottom line. Yeah, if we average it out, they really are making like couple hundred mil a quarter, like over 100 to 200 million of real after-tax net income a quarter. So that's how they can pay a 2.5% dividend. And the payout ratio is only at 15%. So it does really look like the dividend's super safe. And from a forward PE basis, they're at a really cheap forward PE, like a 7.4 times next year's net income. So it looks like you have been missing on revenue, but just off the nature of the loans industry, it's always kind of choppy, kind of like insurance. So interesting name there. Yeah, I mean, I don't see any complaints. It might just be like they're missing a little bit on expectations, but yeah, everything there seems pretty good. Ooh, is Amazon a good buy? A good buy. Yeah, it is a good. I think it's a really good buying opportunity. I just bought the dip on them, a couple of days ago down here at 198 and 204. Yeah, I bought my bulk of my position at 204, right where it is today. So I just can't pass up. Like the risk reward's so good to nibble. Amazon at a 25 forward PE. I mean, it's just like so cheap. 25 times next year's PE. So let's go over next. Plasma said UPST. That's Upstart. That's a car loan business. So they do. We just looked at like an education loan. Here's car loan business, and they do like referrals and stuff. Or let's see right here. So yeah, platform and referral fees. If you go to this on a quarterly basis, these are great year-over-year comps. It's up 34, 61, 105, 45. So that's what you want to see. Are they beating expectations? Yeah, they beat on revenue, and the revenue is expected to go higher from 250 to 350. And they're supposed to continue to stay net income positive. They're supposed to make 12 mil and then 25 mil the quarter after. So it's actually, if we zoom out, yeah, we're at a time, a good inflection point where they used to lose net income every quarter. But now even analysts are expecting them for potentially the rest of the time to make net income every quarter. So let's see what a forward PE is, because they definitely have one. So yeah, they're only at a 24 forward PE. Maybe it's just the nature around the loans right now. It just seems really risky. Like private lending is really kind of collapsing. Well, not collapsing, but like Blue Owl right now struggling. So maybe it's the whole lending space. But anyway, yeah, that valuation is really cheap. Can you check KOG on Norway? What's the name of that company? I don't think I can find that stock unless you give me the name. I saw that one there. My bad if I was... What up, history? Yeah, I typed in KOG. I think it's called like Kongsberg, or tell me the name and I can type in the name and find that stock for you. What up, history? Good to see you. Have you looked at Palo Alto Networks? We have not looked at Palo Alto Networks yet. This is one of my favorite cybersecurity names, and cybersecurity names are tanking. So, hey, what up? Suzuki Man said defensive portfolio is super green. Yeah, we'll look at the defense stocks after this, like a McDonald's, a Coca-Cola, and we'll look at Novo Nordisk too. We covered them a bit ago, but yeah, they had some bad weight loss prescription results today. So yeah, we'll look at Novo Nordisk. So here's Palo Alto Networks. This is that cybersecurity company that over half of the S&P 500 uses. As we know, it's a software name. I always am a believer that cybersecurity is going to be more immune to the software sell-off than like normal software names, because cybersecurity is always going to be in demand. Cyber attacks should only be more common now that AI is here. So oh yeah, they're acquiring a company called CyberArk, which is pretty cool. And another company announces intent to acquire Israeli AI security startup Koi for $400 million. Pretty cool. So let's go look at their actual numbers. So they are expensive even on a dip at a 70 forward PE. So that's the one tough part. I think they can potentially get cheaper because the valuation isn't cheap enough yet. But all cybersecurity names always trade extremely expensive, like CrowdStrike, Cloudflare, Palo Alto Networks. They're all super expensive, but they're expensive for a reason, because they're quality. Here's their business model. Half of their revenue comes from subscriptions. So their subscription revenue is growing great. Like, this is what you want to see for a growth stock. It's up 14%, after grew 21, after grew 30, after grew 35. So they're on a nice streak of growth, and this is all reoccurring revenue, subscription revenue. And if we go to their bottom line, this is their net income right here. I mean, the profits, like in 2021, they were losing money every quarter, but they're phenomenal now. They're still expensive, but like, they're the most quality cybersecurity name in terms of profits. Like, CrowdStrike doesn't make profits yet. Cloudflare still doesn't make any profits, but Palo Alto Networks does. And yeah, here's their free cash flow. $1.7 billion of free cash flow just this quarter. That's how they're able to acquire companies like for like Koi for $400 million, because they have so much free cash flow to play with every quarter. So definitely a super quality name. Nancy Pelosi owns Palo Alto Networks. So hey. Oh, what did I just want? I already forgot what I wanted to look at there. Yeah, no problem there. I don't mind doing that, Joe S. Diaz. Good to see you. And we'll do oh yeah, the defensive names, I'll just show you really quickly. Yeah, like the only stock I think green is McDonald's. Yeah, look at this. Oh, wait, wrong. Oh, this is another defensive name, HCA Healthcare. This is a hospital group, largest non-government hospital group, 5 shares of them, a healthcare name. And then the only stock green in here is McDonald's. And they're actually having a great day. I think actually an all-time high if I zoom out. McDonald's, and not just McDonald's at an all-time high, but Coca-Cola too. And Coca-Cola consolidated. Here's Coca-Cola right there. Yeah, up 2.88%. I can't believe it. So that's why it's always worth diversifying into a bunch of different sectors, because as tech is doing terrible, as my Amazon and my comfort systems is down crazy, I at least have those defensive names to at least carry my portfolio a little bit. So next up, let's do Qualcomm. I saw, what up, Nick? Yeah, let's do Qualcomm. This is that smartphone royalty company. And then we'll do Microsoft, Kongsberg. There's a lot of stocks I want to get to. And Novo Nordisk, yeah. I'm so sorry again if I'm missing stocks. So here's Qualcomm. They're actually very cheap on a forward metric. They had a one-time adjustment making them look expensive. So if we look on the right, they're only at a 17 forward PE. And because if we go to net income, it says last quarter they lost $3 billion. They didn't actually, because if we go to the operating profit, like they really made their normal $3 billion. They just had a one-time tax charge, kind of like Meta did from the big bill thing. So anyway, what's cool about this, I was reading the Morningstar research on this company. If we click right here, if we read, what did the bulls say? The very first line right here, check it out, read it with me. It says, Qualcomm collects royalty income on the majority of 4G and 5G handsets sold, as it holds many essential patents using these networks. So they own a bunch of IP and patents where they just collect royalties. So they have a big smartphone chip market share, but it actually is declining slightly, because I believe like Apple's making their own smartphone chip now, and ARM and some of these other names are getting into it. But anyway, they still have a 24% smartphone market share. Huge. So if you're looking for a smartphone chip play, this one's one of the biggest ones pretty much out there at a 24%. I believe Apple has like a 21%, if I remember correctly. And they're at a 17 forward PE. They have a great dividend. I forgot to talk about the yield. Yeah, 2.5% dividend yield. The payout ratio isn't actually a 69. It's actually way lower, because again, that includes this little negative $3 billion quarter. So anyway, very safe dividend. Nice dividend growth stock right there. Okay. Microsoft is next. This is, out of all the stocks to buy, this is in my top 3 of like the best, safest, most quality stocks to buy for the rest of time and just buy, never sell would be Microsoft. Not financial advice. I think if you just buy it right now, you will get on average like 8 to 10% of your money back for the rest of time every year. Or just whatever the S&P 500 is doing. So another thing is they just redid their what was that called? Their deal with OpenAI. Where yeah, check this out. The very first line. Microsoft extends OpenAI revenue share agreement to 2032 and secures 27% stake valued at $135 billion. So they have a 27% stake in OpenAI, and they also collect 23% of all their revenue. Just goes straight to Microsoft. So they basically just kind of collect royalties for that. But anyway, Microsoft, I cannot believe this. I don't see Microsoft getting any cheaper. Like the risk to reward looks so good in my opinion on the right. Microsoft is at a 21 forward PE, which means they traded 21 times next year's net income. I can't believe how cheap that is. It is so cheap, and this is a great business. They're also being categorized as a software, or in the software sell-off, because they are a big software name. 42% of all the revenues, their software business. You know, think of Office, OneDrive, PowerPoint, all that, Excel, that does over 120 billion of annual revenue, which is just insane. Just one business of theirs does 120 billion of annual revenue. Then they have their Azure cloud. They're huge in the cloud business. That grew 28% year over year. This also does over 100 billion of annual revenue. And that isn't just revenue, it's translating to real profits. Here's their net income down here. If we zoom out, I mean, every quarter they're easily making over 25 billion in net income a quarter now. So it's just so impressive. I have nothing bad to say about Microsoft. They are spending a lot on AI right now, or they're projected to, but that doesn't scare me out of this name. Yeah. So stake in OpenAI. Anthropic projects 80 billion cloud payment to Amazon, Google, Microsoft. Yeah, these are your best cloud plays. You know, I don't really love Oracle, but I love Amazon, Google, Microsoft. Those have big cloud businesses. Microsoft targets 2029 for commercial quantum computing integration. That's kind of like maybe bullish for quantum stocks. I don't know. But yeah, the risk reward just looks so good on Microsoft. I don't see it getting any cheaper. Okay, let's see what's next. Hi from Norway. Hey, what's up, Tast? Good to see you, man. Hope you're having a great day. Okay, Dylan's, Kongsberg. Let's type in Kongsberg for you. So this is that European aerospace and defense stock. So excluding this little crazy rally that they had back there during their IPO, initial like IPO, the stock has been doing pretty good. A lot of aerospace and defense stocks are. So it is a European company. So we've kind of converted, or they're a Norwegian company, actually, forgive me. So we've converted the currency to USD to US dollars. So yeah, aerospace and defense. This is why there's a lot of attention around this name, because the fundamentals are really growing. For the full year 2025, it grew. The revenue grew 49% from the previous full year. So the real aerospace and defense business is booming. Here's where the revenue comes from by like country. So Europe is 32% of revenue. So even though they're headquartered in Norway, only 18% of the revenue comes from Norway. They're very geographically diversified. Like North America is 23%. And here's their net income down here in US dollars. So this is in US dollars converted. This is great. These year-over-year growth rates look very good, up 77% after grew 17. And they're making like 100 to 200 mil a quarter. So what's the forward multiple here? Oh, there's no analyst covering this one. So there is no forward PE, but their current PE is a 44. Kind of cool. Yeah, history. That's a pretty cool one. Let's do next up. Alibaba. Yeah, someone said they reported earnings later. Alibaba is like the Chinese Amazon, but they're more business to business than business to consumer, like an Amazon. Because if you've heard of AliExpress before, like a lot of people on Shopify, like drop ship their stuff from AliExpress, they own that. They're a Chinese company, so let's convert it to US dollars, the currency. But yeah, they're actually pretty inexpensive on the right at a 25 forward PE. And what's cool is they actually have this growing cloud business right here. Their intelligence cloud. Look at that growth. It's up 32% year over year. It did 5.5 billion. So pretty good. It's like a Chinese cloud play, but also they have a huge e-commerce, AliExpress, which is huge. So if we go to their net income, if we average it out, like they really are making a couple billion of net income every quarter, like on average, like probably 3-4 bill a quarter. So yeah, and the 25 forward PE, you get a 0.7% dividend yield. So yeah, it's like a Chinese Amazon. It hasn't done too good. Like, I don't know if this will outperform the S&P 500, but or it hasn't because it is the same price that it was in 2017. But I do like what I'm seeing in terms of their numbers. What's their total revenue up though? How's the sales growing? So we do want to see the revenue start to grow faster, but it is law of large numbers. It's hard to grow this. But yeah, we can see the top line sales growth. It's kind of low single digits, 3%, 3%, 6%, 4%. So kind of want to see the growth accelerate again. But yeah, they're much better of a buy than like a JD or something. There's also Pinduoduo. PG might be one of my favorite stocks. Yeah, this is one of the, oh, honestly, oh, dang, I didn't realize they're doing this good. Dang, I remember this stock down here at 140. Dang, I should have bought the dip on them. Yeah, this is a consumer staple. You've heard of so many other brands like Tide, Gillette, Old Spice, just Huggies, a lot. They're very diversified. So check this out: fabric and home care, which is like Tide, and then they have like over $21 billion plus brands, which is crazy. 20% of the revenue comes from baby, feminine, and family care products, then beauty products, healthcare, and then grooming, which is I believe Gillette. So pretty cool. And if we go to their bottom line, this is what's nuts. They really do make after tax like $4 billion plus a quarter. So they're making $4 billion net income a quarter. That's why they can pay out a 2.5% dividend yield, and the valuation is still pretty inexpensive on the right at a 22 forward PE. But yeah, we can see these organic growth rates. The organic growth is starting to slow down. So we want to see that start to grow again. But it's not just a them problem. All these staple stocks, like you look at a Kenvue, I think they just got acquired by who acquired Whirlpool, or I don't know. Here's another one, but yeah, they have not been doing too well. But that's the most quality pick. Procter & Gamble is definitely the best. I feel like 2026 is a super good chance to get tech and growth stocks. Yeah, I agree. I totally agree. What is SUCON? Is that hey, well, give me the ticker symbol. Yeah, John Madden. If you have a stock you can look at, give me the ticker symbol there. We will check it out. So Bogdan said RRD or the TTD. Actually, I said I'd get to Novo Nordisk. Let me do Novo Nordisk first, and then we'll look at Trade Desk in a little. That's like a TV advertising company. They're kind of being out innovated by Amazon right now. So yeah, Novo Nordisk. So they are down 15% on the day. Unfortunately, there's a lot of bad news around this company right now. So their prescription, their weight loss prescription failed to meet successful results. They did not have a successful endpoint result versus Eli Lilly's weight loss prescription did. So they're actually kind of losing. So they have an inferior product to their competitors now. So if you didn't know, this is that weight loss company, Ozempic and Wegovy. If you look down here, 94% of the revenue is just these products, the diabetes and obesity care products, the weight loss prescriptions. And what they're seeing is, I guess, the weight loss might not work as great as it did. And also, they lose their patents. This was another reason why, like before today, the reason they've been falling way up from like 140 and gap down on these days is because they announced they're losing their exclusivity for Ozempic in 2028 in the Europe and America, and then 2030 in China and in some of these other countries. So they're kind of losing the war of weight loss prescriptions right now to Eli Lilly, and I believe Eli Lilly is doing amazing. So yeah, it wasn't great to see them lose these trials. So that's why I think the multiple is being compressed. Plus, the analysts aren't too excited. They're expecting a decline in everything. So look at the revenue. The revenue is going to go from 12.18 down to 11.18. So the revenue is supposed to fall by $1 billion. Net income is going to fall from 4.2 to 3.6. So as they agreed to cut their price for Ozempic, they actually, good news is they were saying like we're cutting the price for Ozempic, but that should help people stop buying knockoffs and buy us again. So anyway, there's just like a slew of bad news around Novo Nordisk. So what I'm doing is I'm just staying away from that company. Yeah, look, and Eli Lilly's up on the day 4% because what is this right here? Zepbound is the most prescribed weight medication in 2025. Wow. So their Zepbound, which is what they just did a test for, just beat Novo Nordisk. So there's just a lot of bad news, and it's unfortunate. I feel bad if anyone's a shareholder of that one. And I don't know if I'd buy the dip. Maybe, I don't know, maybe something very, very small, but hopefully that was kind of helpful there. I don't want to be too bearish, but I can understand why they've fallen so much. That bad result was not good. Okay. Let's see. Do you know why Visa and MasterCard are down? Yeah, I saw American Express as well. Look at like American Express down 7.7% on the day. So let's see. Is there any specific news? I don't think so. Reports January 2020 card. Yeah, I don't know if there's any like specific news. American Express leads losses. American Express sell off on AI reports. Unique opportunity, says Wells Fargo. So yeah, let's actually look at the one you said there. What's the top 3 stocks you have to never sell and you're never sell? Can it be these 3 right here? Comfort Systems, Powell Industries, and like Coca-Cola Consolidated. Amazon's the one I've been buying the boat on. I've been loading the boat on Amazon. I think it's one of the best buys right now. Not financial advice. So, I skipped past the stock. Sorry, what was it? Oh gosh, I've lost. It's lost in the chat. Uh-oh. Well, I guess we're looking at, it was some financial stock. Oh yeah, Visa. Visa. Okay. Visa. I love this company. They're one of my favorite stocks to buy right now. And thanks again, Bogdan, for the gift. We'll look at Trade Desk next. I'm so sorry I forget. There's just so many stocks right now. I'm sorry I'm missing these. Well, Trade Desk is next for sure. Thanks again for the gift there, Bogdan. So here's Visa right here. This is that credit card company, you know, those small little credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. Every time you swipe your credit card, they take a 1.5% fee. So Mexico's antitrust blocks Visa's acquisition of 51% stake in payment processor Prosa. So they're trying to acquire Visa to acquire Argentina payment platform Prisa. I guess Mexico antitrust are saying no. But anyway, all that aside, they are cheap. Like if you look on the right, they're literally trading at 23 times forward PE, which means they traded 23 times forward net income. I can't believe that. That's for a quality name like Visa, that's so fair and so cheap. If we go to their net income, they print money. Easily 4 to 5 billion of real after-tax net income a quarter, and they pay a dividend. They have a 0.8% dividend, nearly a 1% dividend. It'll be a 1% dividend eventually because they raise their dividends so fast every year, way faster than inflation. So they're trading at 22 times forward net income. They make 5+ billion net income a quarter. Let's go see how much the dividend cost. So the dividend only cost 1.29 billion a quarter. So what are they doing with all the leftover money? The best part about Visa is the share buybacks at the top. They spend, and they've done this for all of eternity. We can zoom out. 3 to 5 billion a quarter solely buying back their own shares. And it's so accretive to the stock price and their EPS. Like the net income's up by 14, but the net income per share is up by 17. So it grew 3% more because the share part of the ratio went down. There's the same amount of net income, but less, shares of the pie to slide it, to divide it between. Bacon said ITRI. Let's do, Trade Desk and then ITRI and these other names. I want to do Philip PM as well, so we'll do them. So here's the Trade Desk. It's that TV advertising company. Amazon has recently gotten directly into their space doing the same thing that Trade Desk does, and they're undercutting their prices. Like, for example, like Netflix used to be one of the biggest customers of Trade Desk, and now Netflix actually stopped being a customer of Trade Desk and went over to Amazon. So Amazon, they use Amazon now. So they're starting to get very attractive, though. Yeah, dang, they're all the way down to a 23 forward PE. So they're only trading at 23 times next year's net income. And they've been beating on expectations slightly. So yeah, if we look at their net income, they print money. Actually, if you average it out, it's close to 100 mil a quarter. And probably at this growth rate, like by this time next year, they're easily going to be making on average over 100 million in net income a quarter. Yeah, hence the forward PE of a 23. So they really are really cheap. I guess we're just going to see what happens with advertising. Meta's an advertising stock. They're kind of struggling right now. Zeta is a little bit, yeah, this is honestly, the risk reward's starting to look very good on the trade. It's like, how much lower can it go? I don't know. I think we're probably close to a bottom, but I do like Amazon as a better play. But yeah, 23 4P. Amazon's at a 25. So see, is there any kind of news here? Projected to achieve moderate revenue growth. Oh, wait, yeah, they report earnings on the 25th. So, in 2 days. So if you buy the stock now, it's kind of like a bend to earnings because they report earnings in 2 days. So get ready for that. That'll be a big mover. So ITRI. Then we'll do, ITRI. Then we'll do Philip Morris. This is Itron. I've never heard of this one, or maybe I'm saying that right. So they're worth $4.4 billion. They had a massive gap down on earnings day. So the reason they fell on that day was because of their earnings report. Let's see what they reported. So that was last quarter, though. This quarter, they had great numbers. They had a beat on revenue, a beat on net income, and on EBIT. So it really was a triple beat quarter, but they must have given bad guidance or something because they beat on every metric, but the stock still fell 20% on, I don't see any news. So this is not good. So this is, the revenue, the sales the lifeblood of the company, has actually gone negative. The sales are down 7% year over year. So that's just not what you want to see. So yeah, if we kind of zoom out here, yikes, the revenue is the same revenue that it was way back in 2016, a decade ago. So the revenue's not growthy, but they still make net income. Like, actually, the net income looks great if we zoom out, like pretty much the best it's been in a couple of years. They really are making like 70, 80 million a quarter now. So that's why that's why they're at a 17 forward PE, but notice the forward PE is higher than their current PE, meaning net income's supposed to decline. And I guess that makes sense because the revenue is also declining. So I kind of just want to see growth come back to this stock. That must have been the guidance. The last quarter they had negative 5% revenue. They're like, yeah, we're probably going to have more negative 5% quarters. So that might explain it, but they are cheap. But I can understand why they're at a teen multiple because the growth is gone. So hopefully that was there. Here's a great dividend play. So if you like income qualified dividends, this is a great one. Here's a cool thing. The cool thing about taxes, if you're like me and you make under $48K a year, if you make under $48,000 a year, and this is why I love dividend stocks, and this is why I'm a fan of taxable brokerages, and Roth IRAs. I'm a big fan of Roth IRA. I have a Roth IRA, but I'm also a big fan of just normal taxable accounts because if you receive a qualified dividend and make under $48K a year, the dividends are completely tax-free because they're taxed at long-term capital gains. And long-term capital gains tax, if you make under $48K, is 0%. So if I go over here to McDonald's right here, or all my stocks, since I make under $48K and this long-term capital gains, every time I receive a dividend, it's tax-free. Pretty cool. So anyway, Philip Morris is a high-yielding play. That's why there's actually a lot of good alternatives. Like if you want to put your money in a money market fund, that's actually taxed at short-term capital gains. You pay because it's interest income and it's not a qualified dividend. You pay short-term capital gains, but if you put it in like a AT&T or a Verizon with the same 4 or 5% yield, you actually get that tax-free. So anyway, here's Philip Morris. This is a higher yielding play, and not just a high yield, but you've gotten great stock price appreciation. This chart doesn't even include the reinvested dividend. So if I go to the yield, you get over 3% of your money back. So no matter what the stock does, you get 3% of your money back just in a qualified dividend every year as a dividend, and they're at a 24 forward PE. This isn't a unique industry. They're in I don't want to say what this is on TikTok because I might get in trouble, but they sell Zen and like those kind of prescriptions or stuff like that. You know what I mean? And it's the main growth driver for the stock is why I bring up Zen is because this is what has been the big growth driver has been Zen. It's growing double digits for their smoke-free revenue. So that's growing phenomenally. And if we go to the net income right here, this was a one-time adjustment that one quarter. So kind of ignore that. They always are making like 2.5 to actually, if you average out, they're making like 3 billion of net income a quarter. So that's how they can afford the dividend. Yeah, let's go see how much the dividend costs for the fun of it. So they're making $3 billion net income a quarter. Let's go see how much exactly the dividend costs. Let's see if it's safe. The dividend costs $2.3 billion. So as long as they make over $2.3 billion a quarter, and they have every quarter, they can afford the dividend. And it's kind of reflected in the stock price too, being at all-time highs. It does seem very sustainable. MO is another big one. Hey, what up, Market Miker? Good to see you. He says LPG. Let's check out LPG. Then we'll do, sorry if I'm missing some stocks. I bought Microsoft today. Yo, Two Trick, your future self will thank you for buying Microsoft. I just think it's such a great one. What's up, Matt? And hey, Cast, we already looked at GNPX earlier. I'll try and circle back to them though in a little bit. Can you do a Norwegian insurance company, PROT? Yeah, hey, Sandre, we'll try and find that one. I'm not sure if I can view it on this exchange, but we'll definitely try and find Protector for Sickering stock. Okay, so here's this is the right stock. Yeah, Market Miker, I like that name. Said LPG. Okay, so Dorian LPG, they're worth $1.48 billion. I'm guessing they're in the oil and gas industry, if I just had to guess. But so yeah, transportation of liquid petroleum gas. So revenue comes from worldwide. Let's check out the revenue right here. I'm assuming, well, actually it's up year over year, but if we zoom out, it's always cyclical because it's a commodity. But let's see what they did. So the revenue was 119 million. On this 119 million of revenue, they netted 47 million. Was that real? Yeah, that's after they paid 5 million in taxes. So the crazy part is this quarter, they really did have a 40% net margin. Some of the other quarters, it's like a 10% net margin, but something happened these 2 quarters specifically where they really did this isn't some adjustment, like they really did have like a 40% margin this quarter and 44% last quarter. So I don't know, like one of their assets just came online or something, but that's great news to see the growth is finally back because it was a tough buy. You don't want to see negative growth, but Yeah, they beat on revenue this quarter. And actually, look at these analyst expectations. They're expecting them to do 67 mil next quarter on 105 mil of revenue. So yeah, they're going to have a 67% after-tax net margin next quarter, and then a 45% net margin. So that's actually very impressive. These are insane margins. Yeah, so that's why they're at a 7.34 PE. They're actually, I'll put them on my watch list. Thanks for that. They might be an MLP. What's the yield? Dang, a 7% dividend yield. See, they might actually be an MLP, which means they might give you a K1 tax form, which I'll have to look into. But I like their numbers. All right. Next up, AXP. That's a big Warren Buffett holding, I'm sure. Oh, and we'll do Klarna. Yeah, Lawrence, my bad there. Hey, Lawrence, next up is Klarna. Don't worry. Yeah, trying not to spam there. I got you. Let me do American Express first because they are kind of two similar industry names. So here's Warren Buffett's portfolio right here. We can see all of his holdings. And then I got to get to Norwegian. There's a lot of stocks I want to get to. I'm so behind. Again, I apologize. But yeah, actually, a lot of people don't know this, but Warren Buffett's largest holding is Apple. It's 22%. But his second largest holding is American Express. It's like almost just as big as Apple. It's 18% of his entire portfolio. So let me share with you why I really like American Express, and I would actually consider buying them on the dip. First off, you get a good yield. If you buy the stock right now, you're getting over 1% of your money back just in a qualified dividend every year. And not just a dividend, but you also get it's a low valuation too. I'll mention that. Look at that. Only an 18 forward PE. That seems super fair. I mean, that's lower than the S&P. The S&P is at a 23, or the industry average, is a 23. They're at an 18. So yeah. International card services, global merchant. So where's the revenue come from? So mostly the US, 77% comes from US. But check out their bottom line. This is the best part. They easily make $2.5 to $3 billion of net income a quarter after tax. So what are they doing with basically $2.5, $3 billion a quarter? Well, they pay a dividend, as we saw, 1% dividend. That dividend only cost them $580 million a quarter. So what are they doing with all the rest of the money? Share buybacks. That's the best part. At the very top, they spend literally $1 to $2 billion a quarter solely buying back their own shares. So that's the real winner here. So they're giving you a dividend. They're doing share buybacks. They're very shareholder friendly, and they're down 7% on the day. They're down 7% on just like the whole industry is. It's not like they reported some terrible earnings. Like, no, it's just like what the market's doing right now, and it could be a really good buy the dip opportunity. Buffett owns that one. Yeah, hey, yeah. What's next here? Oh yeah, Klarna. Let's do that one real quick. Klarna. KLAR. So Klarna Group. Hey, what up, Glent? I'm doing good. How about you? And Remco, good to see y'all. Hope you're having a great day. So let's see. Klarna Group. This is that buy now, pay later stock. A good kind of proxy to see how the buy now, pay laters are doing is look at Affirm. Affirm does the exact same thing. They're like, actually, Affirm is the industry leader. Then like second place would probably maybe be Klarna. So let's actually go check out Klarna's numbers. So they're at an all-time low. Again, they just IPO'd 6 months ago, so they haven't even been public for that long. But yeah, technically they are at an all-time low today. So 30% of the revenue comes from the US. So actually a lot of the revenue comes internationally, other companies or other countries like Germany, United Kingdom, Sweden. How's the revenue growing? So the revenue's up 20% again since they just IPO'd. I can't really zoom out and give you too much like data. Like this is all the data we get. At least we can see its positive growth rate. Revenue's up 20, and they have lost net income every quarter for the past 4 quarters. So potentially, like I wish I'd give you more thoughts on them, but I just can't since they just IPO'd. So maybe if you're looking for potentially a higher quality stock in the same industry, check out Affirm. And they just got net income positive with just as good growth. I mean, actually, I think more impressive numbers than Klarna. Check out this net income right here. They're making the most ever net income they've ever made. And if you look at the revenue, that is what you want to see for a growth stock. And I think, again, Klarna will probably follow this similar success, but Affirm might just be a better winner. I don't know. What do you think? So let's try out this PROT. So, tell me the protector. Oh, we found it. It's some weird ADR, but we found it. And there's no volume on the stock because it's an ADR, but this is the company. It's a Norwegian company. We'll convert the currency to USD to get a better idea. So this is the recent data. So the revenue grew 52% year over year. Revenue's up 52 and the net income's up 200. So they made 70 million on the 400 mil. So they're actually a pretty decent 18% net margin. That's great news. So yeah, they really are making 40 to 70 mil in net income a quarter. So someone was saying this is some insurance company with the dividend, a 2.26% dividend yield. So this is Protector for Sickering, engages in insurance and reinsurance services. Yeah, it looks like this is the company. So, and they're at a 15 PE. Again, there's no chart because it's an ADR. This is the company. It's just an ADR that has no volume because no one trades it. But yeah, these are their financials. Wish I could give you more thoughts on them. I apologize, but yeah. So Remco said CMI stock. Let's do CMI, and then I got to get to Plasma. What stock? Plasma, you want me to look at ACN or Adobe? Which one you want me to look at? We'll do one of those. So, Zen is a product of Swedish Match PM bought in 2023. Yeah, they got a good deal on that. So here's Cummins. This is an actual, like a car engine company. Or they make engines. So engines for like forklifts, tractors, whatever. So they're pretty inexpensive on the right. They're only at a 22 forward PE. So on the left, they look expensive at a 28, but on the right, next year's numbers are only at a 22 forward PE. And that's why if I was a shareholder, I would not be selling or trimming because I legit think this one is going to easily go back to a new all-time high, like the 650, and send this to like, if this just went to a 26 forward PE, that'd be a crazy new all-time high for them. And it wouldn't even be crazy overvalued at like a 26 forward PE. So here's where the revenue comes from, distribution, engine, components, power systems. So pretty cool. 60% of the revenue comes from the US. And here's their bottom line, easily like 600 to 800 mil in net income a quarter. And it's supposed to grow, hence the lower forward PE. And one of the best parts is the dividend. Even at all-time highs, you still get 1.3% of your money back in a qualified dividend every year. Pretty cool. So honestly, I'm bullish on this one. Even though they're at an all-time highs, I would not trim or sell. I think it's going to continue to go up just based off that forward P. Well, tool to use or whatever. Yeah, if you want to get this app I'm on, or this is my favorite app to buy stocks on and analyze stocks, it's free. It's in the link tree in my bio, the very first link there if you want to use my affiliate link. Costs nothing, it's free, but if you end up depositing $100, we'll both get like some free stocks. But yeah, a lot of people just like to download it to analyze stocks for free. And the cool thing is, it's free, costs nothing, no monthly fees. On your idle cash, you get a 3.35% APY as well. So yeah, if you want to get the brokerage I'm on, link tree in bio, first link there. Okay, let's look at some more stocks here. What I want to look at next. Kava seems ready to dip. Oh, Kava. So this is like a Chipotle, just like a smaller Chipotle stock. And Chipotle, a lot of restaurants are doing bad right now. So it's not just a them problem. If we look at their numbers and they're not good, a lot of restaurants are struggling right now. Wendy's is at like an all-time low, like Jack in the Boxes, Cracker Barrel, Krispy Kreme. Unfortunately, they're doing terrible, but this one seems to be doing pretty good. The revenue's up 20% year over year. So the revenue's up 20 and the profits are up by 25. So they're making their first ever sort of profits. Like if we zoom out, yeah, it looks great. The highest ever. They're making like 20 mil a quarter. And these growth rates are good. So at this growth rate, like what's it going to be the same time next year? Someone's a smaller Chipotle, but way more pricey. Let's see what the forward PE is. Because they definitely have one. Yeah. Dang, look at that. So 120 forward PE. That's certainly, that's not a cheap company. Dang, the revenue is supposed to go to 400 million in 2 quarters. So the revenue or the net income, they're supposed to lose 3 mil, or they're supposed to make only 3 million and then 18 mil. So So out of all the restaurants, I don't know if I'd buy them on the dip. Like look at Wendy's right now. I wouldn't buy Wendy's on the dip. I'm just trying to show you how the restaurants are doing. Wendy's is lower than they were when they IPO'd in 1997. Jack in the Box, ticker symbol Jack, they're lower than they were in 2001. So I feel bad for the restaurants, but the best one is actually McDonald's. I wouldn't buy it. Look, all time. That's crazy. A new all-time high today on McDonald's. So a lot of these defensive names is because McDonald's isn't really a restaurant. It's really a real estate royalty company that's recession-proof. That does great in a recession, and that's why McDonald's is at an all-time high on a day when like tech and everything's selling off. By the way, a new stock I bought today was AppLovin. Right here, AppLovin. I'm down 0.7. I just bought them right before I hopped on it's clicking on the wrong stock here. I bought them right before I hopped on the stream. But yeah, I bought 1.5 shares of AppLovin for the first time ever today. The risk to reward just looks so good. And there's so many stocks like that where the risk to reward looks so good to buy today in dollar cost average. And hey, it's good to see Sprouts Farmers Market up 7% on the day. That defense name is holding up strong. after after I'm down like a crazy 44% at the very bottom there. I'm down bad on them. Oh, Maine is doing good. The chicken egg commodity stock. I think AbbVie's doing decent. Yeah, let's see here. Yeah. Oh, Southern Company, dude. Southern Company projected like 10% plus EPS CAGR growth through the end of the decade. They just reported earnings 2 days ago. So this is one of another high yielding name that I like. Has a over 3% dividend even right now, and it gives nice stock price appreciation. Okay, let's go over some other ones. ACN. Let's do ACN here. ACN, and then we'll do. Hey, what up, Flacito? Good to see you, man. And Logan, good. What's up, Logan 22? Okay. And Daniel, what's up? So here's Akinter, probably pronouncing that wrong, but yeah, they're down 5% on the day. Let's see if we can figure out what happened here. So news, OpenAI calls consultants for enterprise push. Is there any? Akinter mandates AI tool usage for senior staff promotions. they're demanding it. Expands partnerships with OpenAI, Anthropic, and Palantir. Those are companies you want to have partnerships with. That's pretty crazy. Including AI training for over 2,000 staff for Palantir. So they're actually, maybe they're like a customer relations or like a employee solutions company. I don't know. Wide range of solutions covering strategy, consulting. All right, let's go check out their numbers because that's, I guess, what matters. Yeah, they're actually at a low valuation on the right. They're at a 15 forward PE, so they only trade at 15 times next year's net income. Let's see what the revenue is. So the revenue is starting to slow down, or if you look at the revenue growth rate, it's like mid-single digits, 5%, 7, 5. So it's not the craziest growth, but it's kind of hard to grow already such a high number, 18 billion. But on this 18 bill of revenue, they netted, actually, this is great if we zoom out. Yeah, on average, they're easily making like 2 bill of net income a quarter. And it is kind of trending higher. So yeah, they really are making on average like 2 bill in net income a quarter. So that's why they're at this cheap, 15.5 forward PE, and you get a 3% dividend. They raise the dividend every year. 48% payout ratio seems safe. We just kind of want to see the growth come back because here's the revenue's up 5, but the net income fell slightly. It technically didn't. So Technology Information Company. Let's go to their website. Oh, they want my cookies. Okay, only required. Uh-oh. Well, the website just like crashed on me. Okay, there we go. Shaping. Oh, I thought that was saying my name there. Okay. This isn't telling me much about what the company does. Anyway, here's their website, I guess. They're headquartered in Ireland. I didn't know that. Their zip code is a 2. They're headquartered in Dublin, Ireland. So this isn't a US headquartered stock. So where's the revenue come from? Even though they're headquartered in Ireland, 45% of the revenue comes from the US. And I like that they have that partnership with OpenAI and Anthropic. Okay. Can you check out a company named TEL or VAR? Let me back out of all these stocks. TEL. Let me know if TEL is Oops, did I unplug my mic? Okay, we're good. Let me know, is TEL TE Connectivity? We'll check it out. I got you. Yes, sir. Citibank, ticker symbol C. And Wesley said Baidu. Let me do Baidu. Is this a Chinese company? Yeah, this is that Chinese ADR stock. I guess this brokerage is telling me that there is a bearish continuation triangle, I guess, from a technical point of view. So they released their earnings in February 26th. So, literally in 3 days, they report earnings. So if you're a shareholder, kind of wait 3 days. So they're obviously a Chinese company. We'll convert the currency to USD just to get a bit better idea of what they do. So they're at a 23 forward PE. They have as of 2025 Q3, monthly active users of 708 million, slightly down year over year, down 4% year over year. But Baidu Core, all the revenue comes from China. So something just happened to their profits, or I'll just show you. So here's the revenue. The sales are down 8.4. So the revenue's down 8.4, and the profits, the net income is down by 81. I mean, I can just zoom out here. Something happens to where their profits these past 4 quarters have declined tremendously, and the revenue is negative 8% year over year. So it kind of looks like they lost their growth. Maybe that's why if we zoom out on this stock, Baidu stock is technically the same price that it was in 2011. So, yeah, I think this might be a Chinese like retail play. Or I don't know, but I'm just not a fan of the Chinese ADRs. Like this one historically has not outperformed. Yeah, I just don't think you probably shouldn't buy this one thinking it'll outperform, the S&P 500. I just don't know if it'll do that. Its current financials don't look great. So hopefully that was kind of helpful there. Hey, good to see you. What's up, AJ? Yo, I check out the link tree. Did not know you had a Rust channel. Yeah, I used to be a Rust YouTuber. Made Rust videos for a living. That's how I got into stocks. I was making a couple thousand a month off my Rust YouTube channel. Then it got demonetized and I was looking like, oh gosh, what should I do with all this? But yeah, youtube.com/Rust moments. Okay, let's see some more here. What's next? Or I can show you the channel if anyone wants to see it. TEL Telenor. Let me type in TELENOR. I found it. Okay, so it's a weird, since it's an ADR, the ticker is TELNY for the ADR. But yeah, this is the company. Yeah, they've done great. Look at that rally the past couple weeks here. They went from $14 to $18. Very nice. Let's see what they do. So, or here's where the revenue comes from. Norway, Bangladesh, Sweden, Denmark. So it's kind of like an international play of what industry are they in? Telecommunications, data, media services. So actually, wait, let's convert the currency to US dollars just to get a better idea of what the revenue is. So they do 1.9 billion of revenue. It's up 16% year over year. And they netted on that well, this is the before tax number. It says they lost 50 million this quarter. It was a total one-time adjustment. They actually made their normal like 400 million. So yeah, the profits look good here. I mean, maybe it'll be better just buying oh dang, they have a crazy dividend, a 5.2% dividend. I actually don't know if I like that. I maybe don't like that they have a high dividend because the payout ratio says it's over 160%. But yeah, the forward PE is very cheap. They're only trading at 18 times next year's net income. So honestly, they'll probably just continue to climb up higher. You still play Rust? Actually, not really. I don't play much Rust anymore. I'll be really quick with this because no one probably cares. Here, I'll show you my Rust channel. I'll be super quick here. Yeah, here's my old Rust channel right here. I've made every single one of these videos and thumbnails. I've edited all of these. So yeah, these are all like from 5 years ago. So yeah, and there's just like, my whole life was every week spend hours just editing all these compilations. So yeah, that was me for a long time. Okay, let's do next up. Well, actually, here I'll show you something interesting. If I'm logged into the YouTube studio. Okay, let me switch it real quick. Let's see here. And then I'm actually about to end the stream here, so I don't really care that I'm being stupid here. Like, check this out right here. I don't even know if I'm allowed to do this, but oh well. Like, check this out. Like, this video right here. 1 hour of the best Rust moments. Here's kind of how the RPM works. 400K views get you around, I guess, 1.4K. And then I have a bunch of these videos. Rust going deep compilation. Yeah, these are all so great. Okay, let's get back to the stocks though, because anyway, I haven't uploaded that channel in years, sadly. But let's do Citigroup, ticker symbol C. Look at a few more, and then I got to go to school, sadly. I got college in an hour and a half, so I got to go. But anyway, here, and then I might try, I stream every day if y'all wanted to follow button. I sell nothing, no course book, just wanted to give my opinion. So here's Citigroup. They're down, obviously, with all the fintech stocks. American Express, Visa are both down crazy today. Citigroup completes sale of Russian subsidiary of Renaissance Capital. So they're exiting out of Russia, which makes sense with the geopolitical tensions and stuff. But let's see what their valuation is. So actually a very fair forward PE on the right. They only trade at 10 times net income, only 10 times forward PE. And then let's see where the revenue comes from. So markets, services, United States personal banking, wealth management, that's a good industry to be in where they just collect a fee, banking, all other. So very diversified. Let's see what the revenue is. So the revenue did slightly decline year over year. The revenue fell 0.06, but it's no big deal. We want to see the revenue come back. Did that miss expectations? So yeah, that did. They did miss on expectations by nearly $1 billion. But yeah, so the revenue's down 0.06 and the net income is down by 12. So that means their margins dip slightly, but that's not the end of the world because they still print like 3 to 4 billion of real after-tax net income a quarter. So they're printing net income, and you get a safe 2% dividend, a 2% yield, a safe 33% payout ratio. So I like that they might be more than just a bank, I guess they're in markets as well. I don't know if that has something to do with the stock market or indexes, but anyway, seems pretty cool. We might just want to see the growth kind of come back. But the stock's done phenomenal, and they're only at a 10 forward PE. That's so crazy. A 10 forward PE. Have you looked into TAC and BE? They're easy money. People are saying Bloom Energy. This is like an alternative energy play. I think they're doing like sulfur batteries. I don't even know. It's just like some like alternative battery. Yeah, like solid oxide fuel cell based. So it's an alternative battery like energy industry. So they've been booming in terms of revenue. If we go to the revenue year-over-year growth rates, they look great. It's up 35 this quarter. Last quarter was up 57, up 20, up 40, up 60. Their balance sheet just spiked up. Did they do an acquisition? No, their assets just went up by $2 billion though. Anyway, they beat on expectations. So this is why the stock is doing so well, because they're gapping up on earnings day because the earnings are so good when they report them. Analysts expected 645. They did 777, and they beat like crazy this quarter. And last quarter they expected 428. They did 520. So anyway, kind of cool. They are missing on their actual net income. They're missing on their profits, but the revenue growth or the revenue piece, what they're watching. But yeah, that one's it. Oh, Vicky said Chewy. Yeah, that's CHWY, right? So yeah, Chewy. Ooh, and AMD. We'll look at AMD too. Yeah, I appreciate you, Nick. Can you talk about AMD for this week? Yeah, I do own some AMD as well, so I am a shareholder of AMD. So here's Chewy. I believe that's that like pet food delivery company. So instead of buying your like pet food in person, they'll deliver it to you at like a lower price. It'll cost less, and it's always super heavy picking up the bags. Dang, look at the expectations. Whoa, revenue's going from 3.1 to 3.36. So good revenue growth and net income growth. They're supposed to make nearly 100 million of net income on that. Will that be a record net income? Has it been 100 million before? If we zoom out, there was a one-time adjustment that quarter, but nah, I think that'll be like the record net income, at least the highest net income in the past 4 quarters. And the revenue is supposed to grow, good 8% revenue growth. So let me check out their website just to double check that I'm thinking of the right company here, right? Chewy, yeah. So they do like pet food delivery. So if you have a dog, cat, whatever, yeah. Interesting. I don't know. They are profitable. How about LightPath? Yeah, LPTH. This is a cool one. And then we'll do AMD. Very good AI beneficiary play. They're already at an all-time high, or pretty close to it. So it's tough to really buy them at current valuations, even though they're down 6% on the day, because they are still a little expensive. Let's see. Yeah, they're still at a negative forward PE, but let's see what they do. Assemblies and modules, that growth is good, up 430. Oh, it's only 5 million though. Infrared components, that's up 63. Visible components, that's up 16. So when we combine all those businesses, the total revenue, this is good. Even though it's really small numbers, at least it's growing. It's up 120% to 16 million. And on the 16 mil of revenue, so they actually, they are still losing money. They're losing a couple mil of net income a quarter. So we definitely want to see them not lose money anymore. But I think it's just them beating on revenue. Yeah, for the past 2 quarters, they've been beating like crazy on revenue, and the revenue expectations are supposed to go to 18 million. You annualize that, that's like 80 million a year. The whole company is worth 645 million. So that's why they're worth 600 million, because they're just still a tiny company. And here's kind of the bad part, the whole company's worth 640 million and they're losing, 10 million, 3 million, 7 million. So you definitely want to, but technically they only lost 1 million this quarter. So something happened. But anyway, as long as they keep up this revenue growth at this crazy rate, the stock will probably continue to momentum up higher. AMD stocks. So here, I'll show you my position in them, and I'll show you my portfolio, which is down bad on the day. I think they're like, we're down 2.5% from AMD. We're down 2.7% on the day. We're only up 3.6% all time. So definitely don't listen to me. I'm not an expert. But AMD right here, this one is still a little pricey, but it's worth buying like the very small amount of AMD. Like if you want AMD as 5% of your portfolio, you definitely do not make it 5% today. But you gotta, it might be okay to go ahead and make it 1% of your portfolio today. Um, Oscar Health. Yeah, I've not covered Oscar Health yet. I'll see if I can get to that one too. Uh, yeah, what's up, man? Hope you're having a good day, Jack. But yeah, AMD right here. I'd go ahead and probably make it like just a 1% of my portfolio. I wouldn't buy any more unless it falls like 5 to 10% from here. But let me show you why I love them. Oh, I got to pull up the data center news. Like they should show that, or it probably just went away. But they're projecting a 30%, or no, I think it was like a 60% um, revenue yearly CAGR of their data center business. And that's their biggest business currently, data centers. That the growth is great in the middle here. It's up 39%, after grew 69, after grew 38. So the growth is just phenomenal, and it's just going to continue to climb higher. We can see the what they're reporting versus what the analysts are expecting. They expected 9.67. They did 10.27, and it's supposed to continue to climb higher. They beat on net income too. So record everything. Like I think this is a record. Like if we zoom out, yeah, record net income quarter on the right, and not just net income too, but free cash flow as well. That's what FCF stands for, free cash flow. So yeah, if we zoom out, record free cash flow, 2.4 billion just this quarter, and no net debt. They have a phenomenal balance sheet. So I have nothing bad to say about AMD really. I like what I see there, but I wouldn't go crazy buying them yet because they're still a tiny bit expensive at like a 70 forward PE. AJ said, I keep buying Microsoft thinking I'm getting the bottom. I think the bottom is so close on Microsoft. Like the risk reward is just so good on them. I'm waiting for SoFi to get down. Hey, yeah, Flacito. Yeah, let's do SoFi really quickly. Then we'll do AMAT, and then I'll get out of here because sadly I got to go to school. Oh, and then we'll Oscar Health. Oh, I should do Oscar Health next. So here's SoFi. Is there any like specific news? I know all of fintechs are falling. You know, Robinhood, even MasterCard. They're all falling. So SoFi is categorized in there. So yeah, they're down 5% of the day, but that gives us a great buying opportunity because SoFi is finally at a really good risk reward, I believe. If we look on the right, SoFi's at a dang 27 forward PE. So they only traded 27 times next year's net income. They seem expensive on the left if you just look at their current PE at a 46. But when you do a forward multiple of 27, it's so fair in my opinion. And the metric you watch for SoFi is their financial services. This is their main growthy business. This is insane. It's up 78% year over year, after grew 85, after grew 114, after grew 195, after grew 440. They are on an absolute streak of growth to where no analyst expected that. We can actually see the analyst expectations. That's this orange line right here. They beat every quarter for the past 3 quarters in a row on revenue and for the past 3 quarters in a row on net income. And the net income is projected to be higher in 2 quarters. So that's why people are taking SoFi serious. This is what you want to see for a growth stock, and they have good growth, and it's reflected in the forward PE. That's why I'd nibble on SoFi. It honestly does seem very fair to start slowly buying a little bit of SoFi. And I am a shareholder of SoFi, so I'm totally biased, not financial advice, but dang, Looney, congrats. I know you own this one, I think. Applied Materials, AMAT, is at an all-time high today, pretty much. So congrats if you own this company. You got to be up on your position. This is one of the main beneficiaries of the huge CapEx spend in the Mag 7. Let's see if there's any news here. Multiple brokerages raise price targets following strong results in AI-driven semiconductor demand outlook. So yeah, it's a semiconductor play. Check this out. Their semiconductor systems are 73% of the revenue in Applied Global Services. But yeah, look at where the revenue comes from. So they are geographically diversified. So their biggest portion, it comes from China, then Taiwan, where Taiwan Semi is, then Korea, and then it's the US. So it's almost like a non-US semiconductor play. Kind of interesting. And if we go to their bottom line, which is in US dollars and USD, this is great. Like if we zoom out, they print money easily over, well, if we average it out, it's like 2 billion of net income a quarter. And it's a good dividend growth stock because they have a 0.5% dividend yield, and they raise the dividend pretty significantly every year. So you get paid more and more every single year from now on. So yeah, not too shabby. So yeah, Tragon said iron stock, IRON, Disc Medicine. I've actually not heard of the stock. Do you think Microsoft is going to go lower? I really don't think so. I really do believe the risk reward is so good on Microsoft. We'll probably close the stream analyzing Microsoft as the final one because I can't stress how great of a deal I really believe Microsoft is. And every company and every person that uses Microsoft in one way or another. So here's Disc Medicine, 2.4 billion market cap. So a pretty small name. Do they have revenue? So they're still a startup. So if you go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service. And That's the bad news, and that's why it's tough to really trust this one. Dang, so they have no revenue, and they're losing 50 mil a quarter, which is 200 mil a year. So they're losing 10% of their market cap a year just in net income. Luckily, they have a good balance sheet and they have no debt, and they still have $600 million of cash. So yeah, they can afford 10 more quarters of losing 60 mil a quarter. So they're good for the time being, but we definitely want to see them start to sell something and narrow these net income losses, because the losses are worsening, and they're having to dilute and issue shares to get that cash. Looks like analysts are projecting, I guess, 150,000 in 2 quarters. Oh yeah, Oscar, my bad there, Jack. Thanks for reminding me, dude. My bad. Oscar Health, yeah, this is one of the like smaller Medicare, Medicaid plays. They're still not profitable though. That's what I think investors are a little disappointed about. All right, let's see. Do they have a forward PE? They do. Oh, no way they actually do. So I'm very wrong. Okay, they have a 13 forward PE. So let me actually see those projections. So dang, next quarter, they're expected to make 470 million, and then the next quarter, 100 million. So that's great. But when we look at this quarter, why they gapped down on the most recent earnings report is because they did miss. So if we look right here, they missed on revenue and net income. So they expected 3.12 billion of revenue. They only did 2.8 billion. So they missed on revenue, and they also missed on net income. They expected a 233 million loss. They lost 353. So I can understand just from this quarter point of view why the stock is struggling, because they did miss on all their metrics. But the growth is still great. I mean, if we zoom out, they have one of the most impressive like revenue growths. Like in 2020, they had like no revenue, like 100 mil a quarter. Now it's like 3 billion a quarter. And analysts are expecting in 2 quarters it to be, or no, next quarter, 4.9 billion. Dang, it's supposed to double quarter over quarter. So are they doing an acquisition or something? I don't know, but there's a lot of growth expected. And to the net income. So we just don't want to see them miss these expectations like they have been. That's my thoughts there. Hold on. Okay, let's see what's next. Oh yeah, let's end HYMC. Let's do HYMC, then Microsoft. Then I'll do a portfolio update. I'll show you what I just bought today for the first time ever, my newest position. I bought on the software dip. I couldn't resist. I'll share with you that after this. Or I kind of already revealed it. By the way, I'm also, if you want to support me, the only way to support me is subscribe to my YouTube channel. I'm also streaming on YouTube. I'm trying to build up my YouTube followers. So if you want to help me out, hit the like button and subscribe to my YouTube channel. I'm also streaming on there. The stream stays up there forever. You can like rewind, replay it. So here's Highcroft Mining. I believe it's a Bitcoin mining company, if I just had to guess. Yeah, so, or no, maybe it's a gold play. So the Highcroft Mine. So are they a gold play? Yeah, so I'm wrong. They're actually a gold play. So no wonder they've been doing so well, because if you look at the actual price of gold, it is just done wonders. Do they have revenue yet though? So they do have revenue. No, they don't actually. So this is from 2022. So that's the last time they reported revenue. So oh, but they do. So they don't have any revenue right now. So the last time they ever reported revenue was 2022. So they have 0 revenue, and they're losing 10 mil in net income a quarter. This is recent. This is 2025. So their mine isn't open right now, but they own this gold mine that I guess supposedly whenever they get it open and they can sell this gold, that's when they'll start making all the money. So I guess it's like a pseudo gold play. I know there's probably some better ones. I think Denshin Mines, this is a great one. Dang, they're at an all-time high right now. It's like you get exposure to gold, but you also get a dividend too. So yeah. There's some other ones I like too. I forget them, but yeah, that's like a smaller nichier one that doesn't have any revenue yet. But yeah. All right, yeah, let's do Microsoft. So Microsoft, again, my probably favorite stock to buy the dip on right now, or at least from a risk reward basis. A cool thing is they have a lot of exposure to OpenAI and AI just in general, because Microsoft extends OpenAI revenue share agreement to 2032 and secures 27% of all of OpenAI. And they also have a 23% revenue share agreement. So just basically Microsoft's going to collect royalties. They get 23% of all of OpenAI's revenue. So yeah, there's a lot of other news around here, but let me show you their actual fundamentals and what they do. So on the right, the forward PE is only a 21. That's why I think they can't get much cheaper than this. It can't go much lower. The forward PE is a 21. I could not see it going to like a 19. So like we're either at the bottom today or like 5 to 10% away. And you get it's like nearly at a 1% yield now. You get like a 1% dividend yield with how they grow their dividend. They're categorized in the software sell-off because they are a software name. Think of like Office, Excel, 365, OneDrive, all that. That does over 120 billion of annual revenue for them. It's their largest business, and it still grows. It's up 13% year over year. It's incredible how that just continues to grow even after 100 billion of annual revenue. And not just their software, but also their cloud business. They have this intelligent cloud, the Azure cloud, that does over 100 billion of annual revenue as well, which is pretty insane. They print net income easily, 30 bill of net income a quarter now, and it just goes up into the right. They have great margins. They have like a 38 or 35% net margins. So, but they are being questioned on how much they're spending on AI. But that doesn't concern me. They got to do something with all this net income. They have a better credit rating than the U.S. government. So, I really, that risk reward looks so good. So yeah, they really did. They own 27% of OpenAI for $132 billion, which is less than that's right around $1 billion valuations. That means OpenAI is worth right around $1 billion. All right. Honest Company. Hey, what up, Larry? The Honest Company. Yo, to be honest with you about the Honest Company, I've never saw what people like about this stock. You know, they just sell a commodity. They like 80% of the revenue is diapers and wipes. So they sell diapers and wipes, and they kind of lost their growth, unfortunately. Like if we go to the revenue, the lifeblood of the company, it actually declined. The revenue is negative 6.7% year over year. It did miss it. Like analysts expected 99 mil, and they only did 92. But what's even worse is the forward projections, because they guided even lower revenue. So the revenue is going to go from 97 million to 83. So the revenue is supposed to fall like $15 million year over year. So not great. So it's kind of like the growth is gone, and it's a low margin kind of commodity, diapers and wipes. Luckily, they have a good balance sheet. I believe they have no net. Yeah, they have no net debt. But it's just like nothing. If you like Honest Company, you love Procter and Gamble. That one I could see as like a swing trade, short-term swing trade. VAR Energy. I don't know if I can find that one. VAR Energy. Oh, I think I found it right there. VARRY. Hey, we found it. And then we'll do, hey, what up? Yobuli, Micron. Yeah, the memory shortage. We'll look at the memory shortage play. Then I'll give you a portfolio update and show you the new stock I bought. I want to get to everyone's stock here before I go, since I'm about to end it. So 9.3 billion market cap. So they're actually a pretty big company. But the revenue comes from Norway. So they do exploration and production of petroleum. So they're a commodity, oil and gas or petroleum play. And the petroleum revenue, or the revenue year over year, is up 31%. What did they profit on that? So on this 2.19 billion, they profited $970 million. So their gross margins are pretty good, 50% gross margins. But then they had they're having these weird adjustments. Like this is the before tax number, before interest, but after tax, they only made 25 mil this quarter, which I'm assuming is a one-time adjustment. Maybe it's the interest they're paying on 25 billion of debt, because that does seem like a bit of leverage. Dang. So they have this is a yield play. They have a 12.5% dividend. So it looks like an oil and gas stock you kind of buy to maximize your dividend income. Yeah, I know there's a few other ones like an Eco. There might be some better ones. GSL is a nice dividend play. So Micron right here, this is your obviously memory shortage play. The memory shortage is causing a lot of issues. What is this? Google DeepMind CEO says memory chip supply chain constraints limiting AI deployment. Let's see. I want to see they have like an incredible backlog. Like they're backlogged into like 2027, like for 2 years. Like it's crazy. And this is why also, even though Micron is pretty close to an all-time high, they're still cheap on a like forward basis. So on a technical, they look expensive, but when we look at a forward PE, forward net income, they literally only trade at 10 times next year's net income. Oh my goodness, hold up. They're saying I'm AFK. Sorry, hold on. Okay. Sorry if it went out there. They made me fill out a CAPTCHA. But check this out right here. It's the net income projections on Micron that's sending the stock to the moon. So they're not just momentuming up higher because of momentum, and they're actually going up because the fundamentals are expected to go up. This quarter was already a record. If we zoom out on the net income, it's never, ever even been close to this before, never been higher. They did 5.25 billion of revenue. It was a record. That's after they paid 800 mil of taxes. Like they earned more. They really did net 5.25 billion after tax. And net income, they're expecting next quarter to be 9.5 billion. And then the quarter after, 11.3 billion. So the expectations are just insane. And that's why they really do trade at only 10 times next year's net income. That's why if I was a shareholder, I really wouldn't sell or trim. I think they're probably just going to continue to climb higher if I had to guess. So Amgen, yeah, hey, I got you, man. Amgen, we'll do that one too. So I think this was a split off from AbbVie a really long time ago. These healthcare names, if you look at all these software stocks are tanking today in the past week, but look at these healthcare names like an HCA Healthcare and Amgen and AbbVie. They're doing great. And Amgen is actually at an all-time high. So congrats if you own Amgen. I believe they do like medical devices. And then AbbVie does, or let's see right here. Or no, this is they sell a bunch of different prescriptions. So these are the names of all their prescriptions, I guess. 12% of the revenue comes from Priola, which there's that annual revenue growth. And then there's Repatha. I don't know how to pronounce it, but yeah, let's go quarterly so I can see this better. Yeah, look at this one. Just this one prescription is up 43%. After grew 45, after grew 25, after grew 13. So that looks great. And I don't want to go through all these, but Otalazella. Okay, anyway, if we go to their net income down here, yeah, they're printing money. A couple bill a quarter. Revenue's growing nicely. Revenue's up almost double digits every quarter. Net income's growing. So yeah, I have no complaints here. And you get a nice dividend. It's a safe dividend, a 2.5% dividend. I really like the growth of some of these prescriptions. Let's see, random one, Tepeza. That's quarterly, slightly down here. Anyway, pretty cool Amgen. All right. So anyway, hope you guys have a great rest of your day. Let me give you a quick portfolio update and I'll show you. Actually, let me show you first the stock I just bought for the first time ever. So for the first time ever, I've never previously owned this stock before. I bought AppLovin, 1.5 shares of them right before the stream. I'm already down 1.4 or 1.24%. So hit the like button for me. We're down bad in this portfolio today. We're only up 3.5% all time and we're down 2.8% on the day. And mainly the losses are led from, Futu, UiPath, Dave's down 7, Zoom's down 7, Reddit's down 5. Actually, how's Reddit looking? I might go buy a share of Reddit after this. Reddit's pretty decent. And that's my Weeble portfolio. They're not my Robinhood account. This is known as my dividend-only portfolio in the top left where every stock in here pays a dividend. The only stock that green is our defensive McDonald's. They do actually good in a recession. They're at an all-time high. Every other stock is red, unfortunately. We also have a Roth IRA. The only stock green in here is our defensive healthcare name, HCA Healthcare. I always have my largest holdings, the backbone of my portfolio, and safe stocks that just give you 7 to 8% of your money back a year, like a McDonald's and HCA Healthcare, the hospital group. Also, we have our Moomoo portfolio, which in the top left, if you look, it's known as our buy and never sell portfolio, where every stock, once I buy in here, I can never sell it. And these are all the ones that we own in here. The only stock that's up on the day is Coca-Cola Consolidated at a crazy all-time high, just like McDonald's is at an all-time high. AbbVie is, Amgen, so is Coca-Cola Consolidated. But yeah, we're down 2% on the day in here, but that's okay because we hit an all-time high yesterday, or we're up 31% year to date, which is pretty cool. So anyway, why is Cormedix down so much with the fundamentals? Yeah, I actually just bought 5 shares of or how many shares did I buy today? Yeah, I bought 5 shares of Cormedix today. This is one you can never ever trust as a meaningful size position, but it's one you buy just a couple shares of just to see what happens. They're one of my favorite micro caps to buy. They're worth like $500 million, but out of all the $500 million companies, this is my favorite one, but you cannot have it as a meaningful size position. But yeah, I'm actually going to do a video about them later, Michael. But anyway, thanks again, Looney, Michael, Fred. My bad. If I missed any of the stocks, but yeah, see you, Larry, 6-star, Riaz, Juan, World, Yobali, Looney, the member. Thanks again. See you soon. Hit the like button if you haven't already. It really does help me out. And for everyone on the TikTok stream, if you want to help me out, the best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. You can also replay the stream if you missed anything, because the very beginning of the streams are really fun. You can rewind it. Let me go leave a comment if you came from the TikTok one. Thanks.